While everybody's arguing about dirty December, the Nigerian stock market just fell flat on its face. Over 527 million shares were traded in just one day without reinvestment or new investors coming in. So within days, the Nigerian market wiped out 1.3 trillion. The all-share index, which is like the scoreboard, has fallen for the 5th consecutive day. And even though report varies, one thing remains: the trend is clear. Investors are pulling out and the market is bleeding. So what could have caused this? Two major reasons stands out. One is the explanation the government is eager for you to accept. And the second one is the one they rather you never question. Well, let's begin with the version that keeps them comfortable, which is Nigeria's designation as a country of particular concern by the United States. And of course, investors do not like risk. They don't want to wait to see what happens. The moment they sense uncertainty, they run. That is why, following US pressure and even comments of Donald Trump's possible action against Nigeria, foreign investors began exiting the market. It's not that the Nigeria's companies suddenly lost value overnight. It is that global trust fell. So when trust drops, money follows. Now the second factor, the one the government wouldn't even want you to talk about, is the federal government's plan to introduce a 25% capital gains tax on profit above 150 million, which is to start January 2026. So imagine this. We're already struggling with inflation, exchange rate, low purchasing power, and then the government wants to introduce a 25% tax on profit that is already shaking. So imagine you've already lost value on your stocks, and you're now told that your next profit will be taxed on 25%. Will you wait, or will you take your money out to look for a safer market? So the market is now facing a double blow, one from outside, one from within. The result of both actions is that investors are selling off, the naira is feeling the heat, and of course, small businesses are next in line to feel the impact. Remember, when big players leave, the little ones suffer. This shows how fragile the market has become. Once foreign investors pull out, local investors panic too because liquidity drops, and before long, the stock market's weakness spread to larger economy. This is not just a financial issue, it is a confidence crisis, because the truth is, economics runs on trust. When trust is broken, recovery takes time. 1.3 trillion naira loss is not just market numbers, it is a reflection of fear, a reflection of how external perception and internal policy can collide to hurt a nation's economy. Yes, the market moves in circle. Stock market goes up and comes down, but this is not normal cycle. This is what happens when uncertainty overshadows leadership. The real lesson here is simple. A country's economy is only as strong as the confidence people have in it. And right now, the confidence is what Nigeria needs to fight for. It's a truth at a time. Take care and have a nice day.